Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it a few minutes past 1100 UTC. A very, very big shout out to everybody joining us live today, as well as all of you that watch this on recording from all over the world. Thousands and thousands of you writing in, enjoying the show, providing some wonderful updates, bits and pieces that have been going on with you, your trading. Just a wonderful thing to see. Market conditions look really good. We've been prepared for this for a while. As we've been covering on the shows, we're going to do a very kind of brief rundown of why we've been prepared for this, what our plays were. You can watch back through the previous shows. They're all available for free on the Bird Nest YouTube channel. If you can't find that, just hit me up on Twitter and I will get you a link. Like I say, it's all free. You can also check out my Twitter profile. One thing I was very, very, very adamant about yesterday in the Bitcoin report that went out was that we were looking for this pump into the highs, which you can see at the moment, the highs being represented by the kind of tealy, bluey grey box, all right? And I'm going to run you through what the plan was then. If you missed the opportunity to join in on this, then we're going to look at what our plan is now. Ultimately, the market develops. We're constantly taking on board and processing new information. So just because if you've missed this move, let's dissect why we took the positions we took, why we were looking at the trades we were looking at. But let's not just do these things in hindsight. We set conditions out on every single show saying where we're looking to take trades from, what those kind of setups look like, and how we can get involved in these markets, and why typically after a decent pump, it's not a great time to just throw yourself into the market, right? Shay, hello. How you doing? It is a banger. Do you know what? It was found by QBS Crypto as well. One of my dearest friends, a stalwart Polish legend and a quality Polish block of a human being. So, he actually used it. He came across this for our Congress event, a free trading Congress, which we host every year. And to be honest, I can't get away from it. I absolutely love it. And he's very kindly added it to the shows for us. It's a great way to start, isn't it? Anonymous Architect, that is a brilliant name and a great little logo as well. That is awesome. I can't quite see it in full, mate. Is that some kind of shark wearing a crown holding a spear? Because if it is, I'm all over that. My biggest passion, I would say, outside of trading is diving, and especially diving with sharks. But thank you very, very much for the compliment. Nick, my friend, it's great to have you here. Just waiting, a few more people just start to pour in. I'm not sure if it's down to actually, I wouldn't say that I'm not a punctual person at all, actually, but these shows do tend to start after a few minutes by the time we kind of got the ads in. So normally about 5-10 minutes in. I think it's probably mostly because people know that I'm going to ramble for the first few minutes. So they get themselves adjusted and then just try and land when the charting value comes in. So while we wait for those people to join, let's cover a very, very important part of our week. All right. So what I try and do with this show on a Monday is set out the mindset that I'm taking into the week ahead that I'm looking to trade. Now, I'm most typically an intraday trader, obviously as market conditions are as they are at the moment. I do step in and out of swing positions, but I have just the most magnificent team around me who cover that side of things. Traders like the Trading Tank, traders like Just Pit, right? Traders like Resumed, fundamental wizards like KZM, covered him on last week's show. And I think he's the most underrated gem, in my opinion, on Twitter. I think he's got, 500 followers or something. He's not mad into his Twitter account, but if you'd followed his last 5 calls, I think you'd be up. They've done an average of 4.4x a call, right? So going to look to get him on the show at some point as well, probably be on one of our Wednesday alt request shows, right? So we'll do that. But anyway, before we get too carried away, let's take a look at the news. Now, this should be on your radar, right? no matter what. As an intraday trader, you're looking for these key injections of volatility to come into the market around the New York session. We focus on the US markets because they are the largest markets in the world. They had the furthest reaching impact on other markets, and the dollar is the world's reserve currency. All right. So as we look at what we've got coming here, this is filtered by red and orange folder, right? That's high to medium impact news events. And again, remember, our focus is on the US. So what do we have? Monday, August the 11th. Boom, nice clear day. All right. A lot of traders will remain sidelined or quite cautious on Monday while Monday's range develops, and this allows us to kind of pick our levels, see what we're trading from the week before, see where the key liquidity pockets are, whether you're somebody that uses stuff like TPO, time and price, or volume, or even if you're just using just standard, support resistance bits and pieces like that. Understanding where the key liquidity has been left from the prior week and the week before that can be really, really key. And that's what we're going to take a look at today as well. Jojo, how you doing, bud? Yeah, all good here. Thanks, mate. I hope it is with you as well. Saw Jojo earlier over the nest having some really great discussions, and always love her insights on the markets, especially both of us quite, traditional market traders as well. So we try and always cross these things over with crypto, especially when we look towards this idea, of laying out our stall. Are we in a risk-on environment, risk-off environment? What are the kind of trades we're angling towards, and what gives us that little bit of extra confidence and belief in really pushing towards that bias? All right, Horace, I'm the most underrated. Yeah, maybe we'll have an underrated show off, but definitely, hey, when 200k, Horace, right? Try cryptos. Hey, buddy, long time back. Well, it's very, very good to have you here. Market conditions look really, really good, and we're going to not waste any time. We're going to dive into the charts, give ourselves a good solid 30 minutes at least of just pure chart action. I really want to review what we were looking at last week, what we're looking at for the week ahead, and the key levels I'm looking to get involved. So where are we? Just to finish up on the news narrative, Tuesday, 12th of August, we come into CPI, core CPI month on month, CPI month on month, and CPI year on year. Core CPI month on month is the one that traders pay most attention to. And, obviously, we're talking about the consumer price index, right? So what you're looking at here is how is the hurt of rising costs, potentially inflation, etc., affecting the average person in the economy, right? Ultimately, if people are really feeling that squeeze, and we see a rising consumer price index, then it just means people have less money in their pocket. It means that times are a little bit tough for them. Unless you're in an inflationary environment, which we kind of are, it's numbing out a little bit, then, that's when you want those policies to be in place because you want to bring inflation down. However, there has to be a balance. People obviously, need to live, need to survive. And for that to happen, governments have to do a very good job with their economy, which very few of them do. So before we make this into a politics show, let's get back down the rest of the week. What are we looking at on Wednesday? Nothing on Wednesday unless you're trading Aussie dollar. All right. Thursday, US again, core PPI month on month, and unemployment claims. This has been a really interesting narrative looking at that potentially soft labor market. All right. And we can see previous 226,000. Forecast at 225. So they're really hoping and looking for that little dip just to show that, there's strength in the economy, and that is looking good. Obviously, PPI, we're looking for that as well to remain flat. It was previously at 0, which was a really good print here. They're projecting 0.2, so a slight increase. Is this the tariffs starting to wash through? People keep saying that we've avoided the tariff impact, but I think the worry on some parts of it is that obviously when these things kicked in, there was a grace period that people could, stockpile, and they were bringing a lot of goods. All of those goods that were coming in weren't, subject to those tariffs at that point. So there's, when that supply then diminishes and those companies are then having to go to the market to buy at the higher prices or absorb those tariffs, the big question is, does this now get passed on to the consumer, right? And how do we see that? How does that start to wash through in PPI and CPI, all right? That's why we're watching these. And then we can see here on Friday, these are really interesting one here as well, because this isn't on here yet, but we obviously have Trump and Putin meeting in Alaska, right? So this is really big. There's talk of Zelensky being there as well. Now, as the kind of mind that I have that could be considered slightly on the side of, I wouldn't say devious, but let's say suspicious, is that they are basically setting this thing up at the end of the trading week on a Friday. It will be late in the day. European markets will be on their way out. I would imagine that US markets will already be through a good part of the morning session. And then anything that comes out of this has the potential to be some of the biggest catalysts for the markets that you could ever imagine. Now, imagine not just for the sake of the markets, but just for the sake of humanity itself, some kind of legitimate peace deal was able to be made there. So, it's always horrible because as a trader, you have to kind of remove yourself from the human aspect of this and look at the markets. But at the same time, as a human being, you have to obviously, if you've got anything about you anyway, then you have to factor in the human tragedy within this. So a ceasefire, peace deal would just be the most wonderful thing from that perspective to stop the suffering of people unnecessarily, in my opinion. But for the side of the markets and to remove that side of things, it would be huge for risk assets. All right, I think we would see some really, really, big pumps across the board. So that's one of the things on Friday. But we've also got a packed news day at Friday as well. We've got core retail sales coming in, retail sales month on month, Empire State Manufacturing Index, but preliminary UOM consumer sentiment and preliminary UOM inflation expectations, right? So these are the kind of early stage nibbles of data that traders really look at in terms of, wanting to price that information into the market before, we get those confirmed figures in the following weeks. So with that to do, 12 minutes in, we leave ourselves just over 30 minutes for pure chart action. And yeah, Jojo's saying here, Aussie as well. We have an RBA meeting tomorrow. Yeah, red face, droopy eyes. Exactly. Yeah, that is going to be an interesting one, actually, if you are trading any currency markets. So let's get ourselves back to the charts. All right. Just be aware of those news events coming up this week. And like I say, Friday, really, that has the potential to go in any direction. So I'm certainly going to be looking to secure most of my positions before the weekend. Right. So where are we at with Bitcoin? So as we can see, we've started here on the 4 hour. Let me just zoom out a little bit. Let's get some full context behind this, shall we? So let's hide these. And then let's get rid of our daily for a second as well. Where are we? Well, we can see here, start of a new week. We need to extend our boxes across, which we shall do. So weekly gap did its job really well. We got the retest that we were looking for, the prior all-time high, right? Beautiful retest, holding the bullish gap. Price ultimately now driving up to 123,293.3 here on OKX, which is the all-time high. So I'm not going to really kind of go into this too much. This isn't really kind of one of those, I told you so shows or whatever. All we're trying to do on this show actually is we learn a lot from when we're wrong. So we're just always trying to hold that accountability moving forward. That's why we keep the TA on the charts, and we only delete the TA on the charts from these charts we use on the live shows, right? So we can always have a narrative around why our decisions were what they were. Ultimately, the chart's just really bullish on the weekly, right? Huge expansion here, which shifted structure. Higher low here, now a higher high. This looks to be setting in for the higher low as price looks to move higher. Outside of that, we're looking for how price reacts at key liquidity levels. This was the prior all-time high at the time at 109,998.9 here on OKX. I'm pretty sure they were shooting for 109,999 flat, but came very close, or 109,999.99. So as we got this look, we can see here the rejections of the wicks trying to get into these areas. Ultimately, price couldn't get acceptance here, so it draws back. When price draws back, it's almost always looking for another liquidity pocket or an area it was previously considered value. All right. So what we're looking for within price is price expands, consolidates, expands, consolidates, right? So price wasn't considered value above here. So it came back to the range low, then it pumped to the range high, it broke out of this range here. And then the idea is it starts to set a new range here. If it hadn't done that, yeah, and price had come back down into this range here, then that would have been our expectation, because the weakness in this area here could have seen this as a deviation. Price steps back in the range, and then we look to trade to the far side of the range. Ultimately, price, and price action and just markets in general are all about value and market theory, right? When you look at auction market theory, for example. So price is holding key bullish levels. Corrections are very natural and normal for the market. As I said when we opened the show, the time to buy is very rarely when you see these large expansions. Sometimes it can be, because as we saw here, price had this large expansion here and didn't come back. Now, ultimately, you could have waited to be a buyer down here, or you trade the breakout after the initial large move and the market structure shift. But if price isn't coming back to a level that you want to be involved, as much as it can be painful to miss moves, often it's better to just stay sidelined. So we were really patient in here. Price came back down, targeted the swing low, reacted at the bullish gap, held the low perfectly. Look at the wicks coming down into these areas. What does this show us? It shows us absorption. What does that mean? Well, it means that there's a lot of bearish energy going into driving price lower here. Bears have just started to take control. But this is where the bulls exerted control back. They wouldn't let it force down below key levels. They're defending that level. buyers stepped in, sellers get exhausted, sellers get absorbed. We come back above this key level here. We look for expansion to the next key level. Now, when we have these large breakouts above these levels here, that's when I'm looking to get involved, right? The same with breakdowns as well. What can be tricky here when you're setting new all-time highs is having targets to aim for. So when you see this large expansion, we leave a beautiful liquidity pool here and then we retrace. The aim of the game is to be patient. We were taking longs this week because we dropped back down into our bullish weekly gap, right? And then the following week, we were expecting price to continue up. Now, when price started to break down, and we'll look at this on the intraday, we were targeting the retest of this prior all-time high or the prior all-time high. So the thick red line or this red line here. And that's quite simply looking for that support and resistance flip. And why are they important? Because ultimately people will try and sell these levels quite aggressively. You see it worked very well here and here. And same with this, people were trying to sell into this, but buyers stepped in and price went back. So what gave us an indication here was just that really, really strong move above it. Now, when we've done that, you then want to see these areas hold. Why? Because if people were short here and they're holding through this drawdown, the price now comes back to that level. It allows them to mitigate. It allows them to step out of that position and minimize loss or no loss at all. And then also allows them to step in with the trend. The market often gives us a lot of information that people don't pay attention to. Yeah. So let's just say we were long up here, yeah, which we were looking for continuation this week. And I get stopped out of a couple of long trades. I'm like, okay, I'm just going to be patient here. Market's ultimately breaking down as we come back down to our key levels. This is where we can utilize lower time frames like we did here. Right, we're just looking through here with a little bit of patience and we're saying, well, what tells us in here when price is ready to go back the other way? Well, we get indications, right? So look, we're trying along these levels here, beautiful bullish wick down here and a bullish pin bar candle, even though it's a bearish candle. So what I like to see is when price breaks down, I'm looking for the bullish candles. Yeah. To keep price pressed lower when we close below them. So we close below, lost this area, ultimately targeting the liquidity below here, also looking towards this bullish gap here to be rebalanced and held. This is the prior all-time high, which was the key level we wanted to engage with. So using the reverse of this, the places I want to get involved in this, remembering that I'm bullish on the high time frame, is this is a key area to buy for me. Now, I'm not somebody that sets limit orders and walks away. I know very successful traders that do that. It's just not how I trade. I like to wait for confirmation, right? So with price coming into this area, I would use a daily or a 4-hour to start taking these positions, okay? So as price draws back down into this level, we're within a weekly bullish gap. So just remembering, even though price looks bearish here, we want to buy when there's blood in the water and sell when there's euphoria in the air. Don't want to be one of these people that's constantly aping into late positions with FOMO, because you're just often going to be used as liquidity for people to get out of their positions. So price came into this area. Here's a few different things that we can look at. So as we look down the white candles, green candles, bullish candles, however you have your chart set up here, for me, they're white. These are making price push lower, right? We close below these, price is selling off to key liquidity. So what do I want to see then if I'm looking for the opposite? Well, I then want to see a couple of things. If I'm utilizing order blocks or areas of supply and demand, so this here, up close candles, close below, this becomes an area of supply. So if we draw this across here, yeah, we can see that still had prominence. Close below it here, initial rejection, rejection, rejection again. Yet when we close into it, it's a good indication that price is moving higher. So if we're looking for the opposite of this, then quite simply, we're looking for the bullish order blocks or areas of demand, right? Here's the down close candle. Yeah, price draws up. That's the higher. I'm going to move this across here. And price expands higher, closes above, meaning that I'm now looking for price to push up from here. And there's one other little bit that I really like to see in here as well, which is this. So this was a bearish gap. Sorry if you can hear that. It's pretty hot in London here today. So my dog Yuki, who's a husky, has just decided to join me in the office. So bearish gap, price draws up into this. Look how well it does at keeping price suppressed. Then we get two indications here that price is looking to push higher. One, we invert this gap, meaning we close above it. That's a beautiful bullish sign. We then look for this area to offer support. Then we set the bullish order block here, or area of demand. So while we remain above this, we're looking for price to push higher. We have this beautiful internal liquidity pool here. High, look, untapped high, untapped high, untapped high, untapped high. That's where we are at the moment, and we're gunning for this level up here. So we're just going to use these principles on the different time frames. If we want to be more aggressive, I'm quite an aggressive trader, for example, right? So once you've got the key levels, you're looking for the same things here. One of the things that I like using, especially in cryptocurrency, but I use it trading the Nasdaq as well, I'm looking for breakers. All right, so I'm looking for those up moves, yeah, that move higher before price sweeps liquidity. So we can see price took out this low here. Price drives up, then drives down, but quickly regains this level. Well, what I'm looking for here is I'm looking for this area, yeah. So this is the area that drove higher, price moved down. When we then close above these areas, this becomes a breaker block, yeah? So, or consecutive candles here, whether you're using the down close candle, I like to look at this whole move, yeah? So this is the move from low to high. Extend this up to here, yeah? Low to high up here before price dipped back down. Why is it important? Because this then was manipulation, yeah? This was a swing failure. Price took the swing and recovered it. So again, what are we looking for? Price goes higher. These people that were caught on the wrong side of this, price draws back down, that they can mitigate. They then see the strength in the market, utilize the high time frame for that, and it allows then for those people and others to step into the market at these levels and ultimately drive price higher. Even within this, we get further confirmation, right? So we set the initial breaker, price really kind of struggling to grind its way up here, which is fine. Price then shoots back down again, but we get the same setup here. So we're either looking for long positions here or here, yeah, or as price drives down into this, some of the keen-eyed amongst you will notice, what do we get? We got this move higher here, yeah, before the sweep of liquidity. This is where the candle closed above. We look for price to then draw back because we want to buy at a discount, and then we move higher. Now, these are key to remember at points of reversals, right? When we're moving higher, yeah, or when we're trending, we're just looking for price to do this. We want to see price respect, remember, because we're bullish, the down close candles, which are our bearish candles, before price moves up. We see the expansion, we target the retest of this area here, or we target the gaps, in this case, the bullish gaps that are left in its wake. Why? Because this shows expansion. This shows buyers stepping in. This shows aggression coming into the charts. We can also combine this with a CVD. Right? One of the things I'm looking for in a CVD, aside from divergences, which I use on the lower time frames, is I'm looking for, I'm looking for contradiction between what's on the charts. Yeah. So if I see a very small bearish candle here, yeah, showing bears were trying to do something to push the market down here, and then I see a decent bullish candle on the chart telling me that there's absorption there. Yeah. Those sellers are getting absorbed in the same way that we start to look across here for further confluence, and we say, okay, does it line up with what we're seeing in cumulative volume, delta, right, with what's on the chart? So we're just going to apply those principles now across different levels. But what we are going to do is we're just going to get this up. Just give me 1 second. Right, okay, let's take a look over here. Let's grab our daily and show you what the plan here has been. So 2 plans, as we've outlined. Yeah, again, all of these videos are available if you do have curiosity to go back and watch why we kind of came up with these. But basically, it's very simple. We're looking for key areas of support, why we should be buyers there, and then we're looking for the key areas of resistance. Remembering that price spends about 70% of its time ranging. All right, so like this very short expansion, decent ranging period. Yeah, nice expansion here, but again, range, expansion, and then it steps into a much larger range in here, right? So when we've got clearly defined areas of demand and supply, yeah, you're just using them as a range. So what have you got here? Price finds support here, resistance here, support again here. It means that you can short this move here, long this move here, short this move here. Maybe that one fails you, but you see price holding this level, getting stuck here to resistance. Then you just get that nice little rip above. Ultimately, we had this nice area up here of supply, yeah, or a bearish order block, resistance, 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 all with the power of hindsight. Price breaks above here. What does this do? prior all-time high, key area that was resistance. We've ripped through it, so we now look for it to become support, and we just get this beautiful retest of all those areas here, giving us that confluence. So now we're at the highs, right? This is where I'm just being a little bit cautious. So when we were back here, the rules were this. We were consolidating after a large expansion. The key was we were either looking for longs from these equal lows down here, which we got a nice reaction originally, right? The price then broke down further. So then we were looking for a deeper retracing to this gap. This was the long that we took, if you remember, on the weekly chart where we saw price dip in and move away. We then got price wasn't able to get back above this area here. Price then broke down further, in which case we were then pretty confident we were going to get a retest of the prior all-time high and this prior area of supply as well. And then we have two plans in place. We close below these, retest it as resistance, trade it back to range lows. Yeah, this then ultimately becomes a deviation and price steps back in the range. Versus strong breakout, play the retest, and like I said, on the lower time frames, that's where we can look to get involved. This exists because had we not had this further breakdown, the rules for me here are quite simple. I need to see this level on a daily basis be broken out above, retested. If I want to go super aggressive here, I can do it on a 4-hour, and let's just take a quick look at what that looks like. It looks like this. Yeah. Why? So deviation. Yeah, this is before we really knew this was the level, right? But now we do know this is the level. Again, with the power of hindsight, we can analyze this. Price got above, step below, retest, sold off. Yeah, we saw resistance here. We saw resistance here. Yeah, resistance here, here. Now price has done what these failed to do here, and it's broken through. So the key thing for me right now is saying, okay, well, what do we look for to hold price? Well, bullish gaps, all right, which we've got here on the 4-hour. So this is a good area in my opinion, but really want to kind of see this area hold. We had these equal highs resting up here, huge liquidity pool. Price came up, it swept those out. Let's not forget the daily view here. We could easily see another long wick rejection like we saw with these prior candles here, and price coming back down inside the range, in which case there's no confirmed breakout. That's why in an ideal world we would see a daily candle close above here, because in 1, 2, 3, 4, 5, 6, 7, 8, 9 attempts at breaking this level on a daily scale, price hasn't managed it. We haven't managed a close above. So if we get one, especially after a beautiful resurgent bullish move like this, then that's where I want to be interested. Okay, so 4-hour positioning. Like I say, I like to see Monday's range play out, but should we fail to hold this area here, then I would want to see a pretty aggressive response at this consolidation, right? Why that? Because look, this was the down move here. Price came up, retested this area here. Buyers stepped in aggressively and pushed price higher. So if the buyers were strong there before, would expect them to still step in with some vigor here. If price closed below this area, would look at that as becoming a point of mitigation. Again, just quite simply support, turning to resistance if we close below it, then looking for retests, and then price to start testing into some of these lows down here. So it's going to be a very interesting day today to see how that kind of pans out. Something we want to take a look at over here is, how are the equity markets and stuff like that performing as well? We can see a bit of a mixed bag for crypto today, a few things up marginally. The legends over at Estate X who just continue to go to strength to strength. Look, indexes are okay. Marginally up at the moment. Dow Jones doing really well today. And then as we look over here, what have we got? We've got gold down today. That's normally a little bit of a risk-off proxy, but again, it's been so incredibly strong lately. Really, you want to see the DXY quite flat, not really doing too much. Prefer to see the VIX down and not elevated, but as long as it remains below 20, it's normally a good indication for risk assets. This is an interesting one. This comes from kind of older days of trading a lot of Forex as well, but using kind of risk on versus risk off currencies. So the Aussie and New Zealand dollar, high yielding, quite, considered more risk on currencies versus the yen, which is ultimately, very much a safe haven currency. And we can see at the moment the Aussie up against the yen, New Zealand down. There can obviously be discrepancies between these, commodity driven currencies and bits and pieces. But ultimately, for a risk on day, you want to see them doing quite well as well. And then when the market's actually open in a couple of hours from now, we've got our magnificent 7 here: Apple, Microsoft, Amazon, Google, Meta, Nvidia, and Tesla. And then, these perk up such a large part of the S&P 500 and the NASDAQ. that's what we really kind of look at and gauge. And I know I said this on last week's show, but for anybody that maybe missed it, while I'm always rattling on about the importance of the US markets, if you look at what a huge and successful economy Canada is, for example, the top 5 companies in the whole of Canada don't turn over as much as Microsoft do. And that's, it's quite a sobering thought, really, to the size of those countries and why the US, obviously, especially under Trump, can be quite bolshy and forceful with these tariffs. Most countries kind of have to fall in line, really, to look at that. Let me just take a very quick look at the comments before we move on. We're going to take a look at Ethereum, obviously going to take a look at Solana. We've got about another 15 minutes left in the show, maybe a little bit less. So if there is anything else you want to see, please do let me know. Jojo, BC, remember I was asking you whether BTC and ETH can be strong together. I think the BTC dominance indicator can be confusing for me to use sometimes. Okay, super interesting. Let's take a look at that as well, for sure. Lucerino, hello, mate. Good morning to you too. Justbit also mentioned there's a CME gap on BTC. Yeah, there is, exactly right. And gold still ranging, unable to break 3,400. Yeah, waiting for CPI. I would agree with that. So our friend Jojo here is alluding to Bitcoin dominance. Now, something that we look for on BTCD, and one of our amazing trading team over at the Bird Nest, Just Pit, one of the best price action traders you could ask for. We're looking at these kind of levels, right? And again, this really for me is about where price is kind of holding. And really, I don't like this term, but people looking at like alt season, people looking for when are these altcoins going to run. The whole point we look at Bitcoin dominance is looking at it more from a perspective of capital rotation, right? While Bitcoin is incredibly dominant, that's gobbling up all the capital in the market. It's not allowing that trickle down effect to happen to the lower caps. It first goes into ETH and then it kind of moves down, blue chip, etc. So what are we looking for here? Well, we're looking for sustained breakdowns, okay? And ideally, we want to see it below the 57.71. That's the real area that I start to get very, very interested in this. But ultimately, as low as it can possibly go, we look previously when Bitcoin dominance was down in these areas, then you can look at things like the altcoin index and you'll notice that there's a lot more capital to go into them. Basically, at some point, the risk to reward doesn't make sense with Bitcoin. And if you're going to look to add a risk asset to your portfolio or trade it actively, you want the return to be there for your risk. Bitcoin's, what is it, 121K today, is it? I just dipped down to 120. So even with some really, immense upside here, let's say, BTC pushes from here up to 140K. Yeah, it's about 15%. When you look at some of these other charts, you look at something like Solana and you're saying, okay, well, what if Solana, Bitcoin chills out, Solana catches a run, back to its high late sort of early 2025, that's 65%. Look how much more upside you've got with this. But again, it's about timing the market. It's about understanding the narratives, okay? So it's not always straightforward here. Which is why we're going to take a couple of looks at these in a moment. Try cryptos. How we doing, my friend? The bearish gap pointed out looks scary. What should give confidence to a trade and not a hodler to remain calm and keep hand? Do you believe in the head and shoulders pattern? If so, how to read it? Yes, certainly. Let me just show you very quickly. So for me, I do kind of believe I'm not an active trader of the head and shoulders pattern. I can find it to be a little bit subjective, but really what you're looking for, it's just these principles that it's price really just kind of driving into a level, right? So obviously it never actually looks like this, right? Actually, that's a terrible depiction. Yeah, it typically actually runs a little bit lower because you're looking for price to come into resistance around this area, formation of the low of this shoulder. But realistically, when you look at this pattern and you take it away, if you're engaging with a resistance level, so you've got resistance up here, right? Price comes in, sweeps this high. Ultimately, what you've got here is in this low, you've got a shift of market structure. Ideally, I like to see gaps in this area as well to show real impetus going down. Price retesting this shoulder, ultimately what lives in here is your breaker candle, right? So this is the down move that led price higher. So all of a sudden, you can see the stacked confluence you've got offering resistance here. Yeah, and that's what you then look to short. So a good way to kind of look at it, what I would suggest as well in terms of pattern trading is checking out a guy called Axel Kaibar. If you can't find him, reach out to me after the show, mate, and I'll send you his Twitter details. He's probably the best pattern trader I've ever come across. CMT level 3. We have him on Congress most years. We're fortunate to have him around, and he has probably the most data in the industry for all kinds of patterns. For me, what I'm looking at here, and this isn't the greatest example in the world, right? But we can see it all over the chart. So we've got a key area of resistance here, right? So price is coming up. Argument would be that this is a shoulder. Price then sets the head, looks to set a second shoulder here, bit of a Quasimodo, but it doesn't really manage to close in below this consolidation, right? So it doesn't really find that acceptance. There's an argument, there's another one here, high, low, higher, higher, into here. Again, it would be looking for price to kind of close in below these levels here because it's focusing a little bit on the breaker. So a good example for this, if we look down here, if we were looking at this being a head and shoulders pattern, just for example, and you're saying shoulder, head, shoulder, breakout, all right? Now, if we're looking here and we're focusing on the candles and what the candles tell us, if we're looking at this up move, this was the sweep of liquidity, being aware what's going on here when price breaks out back above. Why is this important? Well, sellers were obviously very strong here because they really kind of shorted the market, but there were buyers in here as well because we can tell by the way price moved higher. Yes, this can be profit taking and market dynamics like that, but ultimately people were trying along this level after we took out this low. They were trapped here. Again, people can mitigate here if they want. People saying they should go short. The main question you want to ask yourself really is this. If this is the up move, yeah, and this is the order block, by the way. So you got up, price closes down. What do we do when we're moving lower? We look for the up close candles, these and this, to defend price lower. So when we get back to this area, we expect price to sell off. So price returns to here. We get the initial sell off. Then price comes back again. Always ask yourself, if the sellers were so strong here, how did buyers win this back? This is where CVD can come in quite handy as well, actually, because you want to look at the chart and say, this isn't, doesn't really give us a great read here, but there's a really decent sized bearish candle here when you see the end of it just starting to get absorbed. Ultimately, what you want to see really are, a lot of bearish effort going in and that not really being reflected on the chart. This one here, I believe, is the best example. Right? Why? Decent bearish candle on the CVD, but actually a bullish candle here. It's a little bit kind of doji-esque, but probably aligning almost like a pin bar. So what does it tell you? Well, effort went in from the sellers here, but the buyers absorbed and won out. And then that's where we look to have expansion. But even without utilizing the CVD, look, just ask yourself the question, if sellers were really in control of this area, buyers have now taken control back, closed back above it, all right? We look for these areas to hold and push up. It can be a really, really good way to take something like the head and shoulders pattern, right? But implement it in a slightly easier way. So I might have some information on that as well, mate. So if you reach out on Twitter or come and grab us over at the Bird Nest, then I'll try and find some infographics for you to share that kind of breaks it down a little bit simpler as well. Hey, Micro, how you doing? So looking at those principles there. So when you were talking about the gaps down here, right, what we've got, if we look at this on the 4 hour, we've got a nice bullish gap here, right? So again, price expanded here. In fact, think of it like this. When we get the gaps, think about buyers stepping in so aggressively, there's not really enough orders there. So the market jumps, yeah? Think of it like the most aggressive auction you've ever seen. So someone's auctioning off something that's just immensely valuable, but also has a huge amount of interest in it, and there's only one of them, or there's very limited supply. That's what drives prices higher, right? And that's what's great about Bitcoin, being a diminishing asset pool. It's, there's never going to be more of it. There's only ever going to be less. So ultimately, that drives its value up. But think about it like this. Buyers were kind of tentative here. Yeah, a little bit of tentative buying, can I get 117? Can I get 118? Can I get 118? Can I get 118? Yeah, people stepping in. Can I get 118? Can I get 119? 119, 120, 120, 121? That's how quickly it stepped up. And the failure there for price to be balanced leaves us these inefficiencies. It then allows the market to rebalance these areas. And then it allows buyers to step back in within here as long as the buying is still strong. So while we hold that gap and while we hold this resistance level as support, then actually quite looking very, very promising here, right? We come back into this range, remember, and let's not forget, it's important to factor in our time frames. We really do want to see a daily close above this level because we haven't achieved one yet. Remember, the 4 hour is our most aggressive approach to this, and we've got our 2 areas of interest lined up here. But ideally, what we want to see is price kind of recover this and hold this level quickly, stepping in to make another range up here, probably between this level and the prior all-time high. Then we want to see that breakout from there. So let's just run through a couple of bits and pieces on here as well. Just going to take a look at ETH and Sol, and then we're going to have to jump off today, unfortunately, guys. So let me just shut that. Get rid of some of these because this is just from examples from a webinar I did in a week. Save these up as July 25. Then they will become an issue for another day. There we go. So we've been talking about this with ETH for a while now, and this is just a thing of beauty in my opinion. These levels have been so good to us. Again, just key support and resistance or pivot points. We've been looking for these strong moves above, like this, closing above, retesting this area. Here's our key SR flip level. The grey-green boxes that you can see, or grey-blue boxes here, represent the areas of either supply if they're high or demand if they're low. Again, we're just looking for them to get flipped one way or the other. So we regained this area. What do? Retested it, pushed up to the highs. Again, got rejected our area of resistance or supply. Price drove back down lower. Now, we did close below this box here, which had me feeling bearish initially. We'll look at this on the lower time frame in a moment. I'll tell you why we got that little bit of extra confluence there. However, when price then stepped back above here, and especially when it closed back above here, what did we get? We got that beautiful retest here. And then we're saying, okay, we know we can trade from here to here. Why is that? Because on the retest of this area here, we know where we're wrong. We're wrong if we come down below the low. Have we got a worthwhile trade into these highs? And I'm targeting this high because that's the part that's been drawn into this gap, into this resistance area. We got a 2 risk to reward. Great. What does it allow us to do? Allows us to take a trade in here, knowing where we're wrong. If we're wrong, we cut it. If we step below there, price comes up to this level here, well, we can take profit here, but still hold should we get this breakout. What had happened if we'd taken profit here and price came back? No problem. We booked a little bit of profit. We reconsider. Or if we started to see price break down, we cover and we hedge the position with a short back to the lows. Okay. We didn't get that. Price broke out. You got a really nice position sitting there. Now, what I'm interested in here is this. See how price just dips back in. Back to my terrible analogy about the bowl of boiling hot water and the bowl of tepid water. There's a gold coin at the bottom of the beach. All right. What you want to see, if this is the boiling water here, or this is the boiling water, imagine this is our bucket. Let me draw you a nice crude bucket, yeah? And this is the gold coin waiting for us at the bottom. Well, you try and put your hand in the bucket, but what happens? Hot water, so your hand gets pulled out very quickly. That's what forms this V-shape reversal, yeah? Price dips in, gets brought up really fast and flies to the other side. We saw a little bit of that here as well, right? In an inverse fashion. Price dipped into this and very quickly got rejected. Look at the difference here. Price touched the level, kept the hand in. So all of a sudden you're saying, well, water's obviously not that hot, is it? Price is making progress in this area. So now we just really want to see this area hold, all right? So this, a little bit like we've got with Bitcoin at the moment, is the key area. And if we're using the same principles, which we should, because it allows us to build consistency, then this represents our bullish gap. And failing to engage with that, I would be looking to this consolidation here, right? So we had this up move before price broke down and took liquidity down here. There's an argument that this really was the up move. So what I'm going to do is I'm going to draw this level across as well, have that as our breaker line. So this was the move higher that led to the purge of liquidity lower before it was closed above. Look how price drew down to this same level to retest it. So we have confluence there. This is a nice area in here, obviously, to look for price to go up. Now, the contradiction here is that obviously if we do have a deeper correction to here, like we kind of said with Bitcoin, remember we got this gap here as well, and also this gap, I'd like to see a quick reaction, right? So price drew down here. I would want to see us kind of get back up into these levels relatively quickly. And I'd even be happy enough to be patient up here, unless we got a very, very strong reaction on the lower time frames down here. But as long as we continue to hold this level, things looking really, really good here, in my opinion, for Ethereum. Right, we're going to take a very quick look at Solana, and then we're going to have to go today, fam, unfortunately. Let me just take a look what we've got here. Let's just see what these were relating to on the lower time frame. Okay, yeah, so this was a nice area here. Ultimately, it was actually this move up here, but this one here, we could see if we draw down again from the move up, from the low to the high. Again, we're just looking at this as an area. When price returns to these areas that we saw here, we got an initial rejection. Price breaks out, so we then look for this to give us some long setups. And it did. We got some nice long setups in here. But again, look, price revisits the area. What does that mean? It's tepid water. It means that there's a likelihood that price then breaks down below this. So fine, it served its purpose. We can get that off the chart now. This was the area we were looking at here. This was the untested area of demand. You can even extend it here to look at the consolidation before price broke out. Again, it gave us confluence from the level that we've just taken off the chart here. And again, longing this area here because we took out these lows, came into this level, but ultimately price then broke down. So again, we can remove that from the chart. These would have been from intraday, so we can get rid of those. This was a key level and remains one. So we had equal lows below here. This was the down move before a really large expansion. So when price comes into those areas, remember, we're ultimately hunting where the aggressive buyers are, and they were there. So let's just take a look at this on the daily, make sure we've got a decent plan in place. We do need some kind of structural recovery here from Solana, right? Now we've got this down close candle sat in here. So let's see if price draws back to this area here, what we get. We do also have this really lovely gap here as well. I think this is going to be an interesting one because ultimately at the moment we're kind of stuck here, right? This was the up move before price broke down. Yeah, so this retains as a bearish order block. So what do we want to see? Really, really simple play here today from me. I want to see a price close above this area, and I actually redraw that there, have these drawn out in blue. So bearish order block, close below, retested, price sells off, seeing an initial rejection here. So what we want to see in terms of structure is rejection here, perfectly natural, support here, this area reclaimed, just like that, goes from resistance to support. And then Solana's got everything it needs about it to really push up. And for me, that plan's so clean, I really don't need to move on to a different time frame. All right. Fantastic. All right, guys. Well, look, I'm going to run today, trying to keep these shows a little bit shorter and punchier for you all. But please do remember on Wednesday, you're going to be back with the alt request show as well as chart requests. So if you've got any assets you'd like me to take a look at, Micro will happily take a look at QNT for you there. Unfortunately, we've just got to cut this one a little bit shorter for today, but we'll absolutely take a look for you on Wednesday. You can reach out to me, give me some suggestions, and just copy them, pop them in the chat for the show, and we will take a look. All right. So remember, market's looking good. Make sure you're approaching it with a calm head. Don't get lured in by the FOMO. Make sure you're taking the educated position. If you'd like to know anything more about me, the Bird Nest, the wonderful team we've got over there, you can find all the information down in the description. Apart from that, wishing you all a fantastic start to the week. I'll see the rest of you legends around the nest. And for the rest of you, I'll see you all on Wednesday. Take care, everyone.